What signal can I take away from the shift in pricing that we have seen? What's been priced in? What's been priced out?
Look, first and foremost, what we saw last week, very much positioning driven. And remember, we've got a lot of options expiry. So we do get October, November. I'm sure you remember end of November is always one of those periods as well. And October as well, you do see this kind of volatility around expiries. But I wouldn't necessarily read too much into that. The scale of the move was massive, but it was essentially a $10 move, right? We also moved from 85 to 95 pretty quickly, maybe not in like 2 sessions like we did on the way down. And now we are kind of crawling back up close to 90 now. The reaction, what we've seen right now, I would argue, is the market pricing out the fears that Saudi Arabia might be bringing back the voluntary cuts quicker than expected because of the diplomacy going on between, or was at least going on between US, Saudi and Israel. We continue to say that, look, these fears are completely unfounded. My conversations with Prince Abdulaziz kind of confirmed the fact that oil wasn't even a part of the conversations, but the market was very, very afraid of that. Yeah. That's been taken out because of what's the events over the weekend. Clearly, those talks will slow down, potentially get derailed. We have to see. But the market's definitely not pricing in an escalation which involves Iran. That is yet to come.
So that was my next question. The obvious fear that the U.S. will crack down harder on sanctions on Iran after there was basically some loosening up, even if it was de facto. How should one price that, and what do you think the reality of that will look like?
It's a challenging one, right? Because most of that Iranian oil is going into China, and which is very, very hard to enforce anyways. So yes, the US had turned a blind eye, and maybe now they kind of turn around and say, look, you know, that there will be certain measures or just more of a scrutiny. Potentially a little bit of volumes come down, but at the end of the day, it is only China that's buying it. And it's very hard for the US to enforce any kind of sanctions, given the route that Iran is right now taking to China. I think that's the challenge they have. But yes, I think generally speaking, you might get a bit more vocal U.S. administration, and they had turned a blind eye. You could definitely expect some more, just a bit more scrutiny around those volumes.
Amrita, what is not knowing what comes next worth in terms of the oil price? And have we seen that to a certain extent already? What's the geopolitical risk valued at, do you think, currently in the oil price? And what could it be valued at?
It's a great question. I don't think it's very high, given what we've seen is, again, the pullback has been pretty severe, and people are kind of starting to price in a little bit of okay, at least Saudi Arabia is not going to bring barrels back early. But geopolitical tensions, generally what ends up happening, and remember, even for the attack that happened on Saudi Arabia in 2019, we had this big spike, and it does tend to come back down. So even right now, I wouldn't say there's a lot of geopolitical risk premium in prices. We don't even have a lot of disruptions right now. Libya, Nigeria, they're all operating more or less given where they have been in the past. But even Libya, there's definitely noise around certain kind of events there. So we should be watching that as well. So I don't think the market's frothy, if that's kind of the geopolitical risk premium that you're asking. Not a lot in the price right now.
So Guy actually asked me this question earlier, Amrita, and he's like, well, I'm paraphrasing. Why can't the U.S. just pump a lot more? If like something's happening, can they actually get more oil out of the ground quickly? And I was like, I'm not sure. I mean, you're already pumping 12.9 million. It's going to take at least, 6 to 9 months, 12 months to get more out. And we've kind of maybe reached the peak of getting out all the good oil. Was I off base there, or do you feel like that's kind of right in the market?
No. You were in Oklahoma City with me. How
Alex
can you be off base? This is exactly what people were talking about.
Yeah.
Alex is right. We are peaking out at around 13 million barrels per day. The best quality acreage has been drilled. And as we heard there from a lot of the executives, the general environment hasn't been particularly conducive to continue producing. But I think for me, the geology is far more important than the regulatory scheme. But we are peaking out in terms of the pure black oil, not NGLs, not gas. And we do have growth slowing quite substantially next year.
So should we expect higher for longer oil prices? Is that the takeaway from all of this? And how do you think that manifests itself globally in terms of the demand story? If say we're in the kind of 90 to 100 range, I don't know, what does that do to growth?
So I think 90-100 is very, very plausible. That's kind of where our price forecasts have been for Q4. It is for next year as well. And again, because if you're not producing in the tier 1 acreage for shale, your cost of production or the floor is no longer in the 60s, now is in the 80s. So the 90-100 is a fair price, potentially. In terms of growth, right, I keep saying the crude oil price matters a lot less. What matters is what are gasoline and diesel prices doing. Gasoline prices have come off. It's seasonally winter, and you don't get a lot of gasoline demand. So at the pump, we're not paying the particularly high prices. That's the most important factor, I would say. Diesel, of course, is much higher. Purchasing power is a lot higher as well. My concern right now with 90-100 is not the price level. I mean, that's absolutely fine. Emerging market is fine at these prices as well. It's much more on top of high interest rates. If savings are also being depleted, if interest rates continue to rise, does that put additional burden on the consumer? I don't think the jury is out yet, but that's the concern I have for next year. We already have demand growth slowing from over 2 million barrels per day this year on year, to about 1 million next year. But that's not a function of oil prices. It's much more to do with the economy.